support banning TikTok. Would you sign that bill?
If they pass it, I'll sign it.
The call for a potential TikTok ban is growing louder by the day, and it looks like that ban could be right around the corner. A bill, H.R. 7521, also known as the Protecting Americans from Foreign Adversary-Controlled Applications Act, passed the House Energy and Commerce Committee at a very rare 50-0 vote, and passed the floor of the House 352 to 65.
The rules are suspended. The bill is passed.
It's currently at the Senate, where its future is a little bit less certain. Since this is a channel for investors, we'll go over 3 possible ways to turn a profit over the TikTok ban. And then we'll actually look at the proposed bill, and I'll give final thoughts on the ban and if I think it's warranted, and if the proposed bill will actually solve the solutions that Congress is trying to work at, or if it's actually just a Patriot Act 2.0, as some are claiming. Of our 3 strategies, I'm sure one will be a
tic-tac-toe,
a winner. If you like this type of content, please consider subscribing. We release new videos weekly and go deeper on investment analysis than just about anywhere else on the internet, as you're about to find out. Okay, so the first method we have to profit off of a potential TikTok ban is to look at who the possible acquirers are or who's already on the cap table. And if they have a public fund, jump into it. This is probably the riskiest idea we're going to talk about. That's because there are a lot of people gunning for this TikTok acquisition. It is not usual for the most ascendant technology platform to be put up for sale, and so the sharks are circling. The question is, who are the potential buyers?
You've got the brand TikTok, a great brand. Got 170 million eyeballs. You got 5 million businesses, those are my Shark Tank guys, in their 20s, 30s, and 40s. 85% of the people on TikTok know who I am. I think you need a steward to tell them a simple message. I'll guarantee you that if I buy this asset, the day I switch over, I will turn TikTok China into TikTok USA.
Yeah. Okay, sure. I should have said who are the serious buyers. The most vocal has been Instant Coffee John Oliver.
I think it should be sold. I understand the technology. It's a great business, and I'm going to put together a group to buy TikTok.
So Steve Mnuchin obviously has political capital and is a Washington insider and could possibly know the right people to get something going. Unfortunately, his own private equity group isn't public. So even if you think Steve Mnuchin has the highest chance of acquiring TikTok, you can't directly put your money with him. Other names mentioned on possible acquirers, the CEO of Rumble put in a bid, and then former Activision Blizzard CEO Bobby Kotick. However, if you know anything about him and his time at Blizzard, it didn't end too well. But in that video, Steve Mnuchin did mention a consortium of investors. Who could that include? If we look at the current ownership of TikTok, we might get a little bit better of an idea. And who better to ask who currently owns TikTok than TikTok themselves? But unfortunately, it looks like they kind of intentionally obfuscate who owns the company. They talk about 60% is owned by global institutional investors such as BlackRock, General Atlantic, and Susquehanna International Group, or SIG. And then 20% is owned by the company's founders, and 20% is owned by its employees. And then it tries to say that it's not owned by any government or state entity. Now, that is not a really good answer. That seems intentionally obfuscated. If there wasn't anything suspect, you'd think they would come out and say exactly who owns it, especially because they're under the gun so much right now. Fortunately for us, the publisher, The Information, did a good bit of research and found some of the funding history. So we'll go into that and cross-check that with the companies themselves and see if they list themselves as owners of TikTok. We'll start from the oldest investors to the newest investors and cross off as we go. Starting off with Susquehanna, which was mentioned on TikTok's page. They unfortunately aren't public, so we can't invest in them. And then moving on to Starling, which does list ByteDance as one of their companies, which also isn't public. Source Code and Puha are both Chinese venture capital firms, and so obviously not public, and we cannot invest in them. The earliest investments are from Chinese companies who still have interest in the company, and so they don't really call that out. They call them out as international investors. Finding TikTok's parent company ByteDance's cap table is incredibly difficult. That is strike one on the stinkiness. You would think that a company that is under the gun so much from regulators would just come out and say who the owners are. And they won't do that. Okay, that Milner reference is a reference to Yuri Milner, a Soviet-born Israeli entrepreneur and the founder of investment firm DST Global. Through that company, he's an investor in Facebook, Wish, and Baidu, and was an early investor in ByteDance. A 2017 article from the New York Times claimed that Yuri Milner received millions of dollars from the Kremlin for these investments. So again, another stinky point. Okay, so moving along, we have Sequoia China, which was rebranded in 2023 as Hongsha, which also got a call out from the Select Committee on the CCP, so it's also stinky and not something we can invest in. In that letter, they state, investments in PRC entities have included certain investments that have contributed to the CCP's human rights abuses and PRC's military modernization, and its overall attempts to undermine US technological leadership. Moving along, GIC is a Singaporean-based fund. There's not a lot of information on them, so again, stinky and not actionable by us. So then we get to Altimeter, which is a Menlo Park-based VC firm that is also private, so no dice here. General Atlantic is the same. Coat 2 is a technology-focused investing fund. Its founder, Philippe Lafrance, sits on the board of ByteDance, but it's private, and so we can't do anything about it. SoftBank is a public company, but if you look at the founder Masayoshi Son's track record and its fund performance, this might not be your first pick, unless your name starts with Adam and ends with Newman. Moving along, NEA, or New Enterprise Association, is a American-based venture capital firm, but is also private, so no dice here. KKR is public, Tiger is not, Fidelity is private, Zhanghe is also private, and Carlyle Group is public. So there it is. Out of that entire list, we only have 3 options: SoftBank, KKR, and Carlyle Group. And if we look at the performance of these 3 funds, SoftBank has returned about 56% in the last year, but only 16% over the past 5 years, and 290 since 2010, which definitely lags the S&P 500, versus Carlyle, who has returned 49% this past year, and only 144% over the past 5 years. And KKR, which has performed a pretty impressive 97% return this year and a 300% return over the past 5 years. So if you like something about those companies, that could be worth researching more. The thing that works really well about investing in one of these companies is that it also is a hedge on 2 out of the 3 outcomes. If the company is sold and they aren't included on the takeover, then the company will make money off the sale. But it's also just as likely that they would be a part of that proposed consortium of investors moving forward. If the company is delisted in the US, then they still own a stake in ByteDance, which would certainly be a blow to the valuation, but I don't think it'd be a total wipeout. And so if the bill never gets to the Senate, then they still own a piece of a very valuable company, and you get the other work that they're doing in private equity. Our second strategy to make money off of the TikTok sale is to look at the existing large tech companies. Altimeter Capital's Brad Gerstner in a tweet actually leads us right to our second point. He states that he is also an investor in Facebook and Google, which are the 2 most obvious beneficiaries of a TikTok US getting shut down. So let's go into that. There are 2 plays here. Brad Gerstner's tweet is clear. Google owns YouTube, and so if TikTok shuts down, traffic could be pushed on to other YouTube shorts. The same applies to Meta with their Instagram Reels. They will clearly benefit from the freed up attention span, and users are used to swiping for content and would like to continue to do that. I think that this TikTok ban could be a nice cherry on top if you like the underlying businesses of these companies. We made a video last week on Ray Dalio's open letter titled, "Are we in a stock market bubble?" If you're interested in that video, we'll link it right here. In that letter, he specifically calls out that he's reading Alphabet and Meta as somewhat cheap right now. So a TikTok ban will benefit them, and they're already trading at relatively fair valuations. This is the start of a pretty provocative investment thesis. And there's also another side here. If we look at the companies who were interested back in 2020 when TikTok almost got forced to sell, we get some insight into what a potential deal could look like.
Right now, we're looking at a deal where Oracle would get 12.5% stake in TikTok. Walmart would get a 7.5% stake for a combined 20% stake, but ByteDance would retain an 80% stake in TikTok. Now, as part of the deal, TikTok would create a new entity known as TikTok Global, which would be headquartered in the US. That would oversee all of the technology involved in the US TikTok operations, including the data of those 100 million users here in the country, which would be stored on Oracle Cloud servers.
Since those companies were predominantly Oracle and Walmart, with a little bit of Microsoft showing interest, those companies could look to get back in on the new deal. I don't really see this as a super viable path, so I'm not going to spend too much time talking about it. It seemed like Oracle had a great chance of winning the bidding war originally because they had a lot of tailwinds due to founder Larry Ellison being pretty close to President Trump at the time. Overall, this second strategy is a little bit loose right now because if big tech does step up to the plate, then we'll actually have a lot of time to digest this news and see if we want to take a position. That's because corporate M&A doesn't move too quickly. But this does lead into our favorite point, which frankly, I'm doing the most to watch. We mentioned that Oracle seemed to get some favored status in the possible acquisition because of the political nature of this deal. And that speaks to how political this is. And if there's one thing we know about politicians, it's that they love to trade on insider information. And so we can look at capital trades and filter by technology and see who has been buying and selling. So far, it doesn't look like any politician is betting on a specific tech company, but that's because according to the Stock Act, Congress has 45 days after their trades to report. So we'll only get a lagging indicator on this, but it's something that I'm going to continue to watch, and I'll be sure to share it to our Discord if anything pops in the near future. There's a link to that Discord in the description if you'd like to join. And so this is our last strategy. Watch what Congress is doing. I think that there will be someone who bets the farm as soon as the dust settles and we start to see what a possible takeover target will look like. If I had to stack rank my favorite options that we proposed, I would say continue to watch Congress, and then second would be the private equity play if you like the underlying company, and then third, again, if you like the underlying company, looking at Meta or Google. All right, so this is the point in the video where we'll actually take a look at the proposed bill. The proposed bill is called HR 7521, and immediately it calls out TikTok or any successor developed or provided by ByteDance. So it's clear that this bill is targeting ByteDance. Section 2A1 immediately calls out prohibition of foreign adversary-controlled applications. Basically says it'll be unlawful to distribute, maintain, or update a foreign adversary-controlled application by carrying out within the land or maritime borders of the United States. And that they're targeting marketplaces and internet hosting services. So it'd be unlawful for Apple's App Store to host TikTok or ByteDance to be hosted on AWS servers. So they're hitting them upstream at the heart. This leads to the obvious question of what is the definition of a foreign adversary-controlled application? That seems a little bit squishy. We have to go down to section G3A to get that definition. And it's not great for ByteDance. It specifically calls out the foreign adversary-controlled application, means ByteDance, TikTok, or any subsidiary successor that's identified, or any entity that is owned or controlled by the above. Or it's a covered company that is controlled by a foreign adversary. And this is where the bill gets a little sketchy for on our end. That's determined by the president to present a significant threat to the national security of the United States, which is why you have some debate going against this bill, saying that it's basically a Patriot Act 2.0. And this is where some disagreement over the bill is pretty well warranted. This does give the president a little bit too much power for me. I'd much rather it go to Congress to vote, but I'm also sure there are mechanics to this that I don't understand. I am not a politician, nor do I want to be. Overall, I do like this bill, and I also like the debate that both sides are having. I hope that it reaches the floor of the Senate, and we can continue to stay tuned into those debates. That's all for this video. I hope you got some value out of it. What are your thoughts on the TikTok ban? Do you think it's warranted? Let us know in the comments section below. Thanks for joining us.